Good morning, start of the week, Monday, market analysis time as usual. And there's plenty to take a look at. Quickly scanning the news site to start off with. US stock markets futures are looking nice and green. As expected, the usual weekly classical man in gray suit talking, making themselves important, talking about bubbles. Nothing really new on those stories. And European stocks also likely in the green. For the rest, I didn't find anything really shocking or that could have a big impact on the market at the moment. I think the economical calendar has some nice things. My usual calendar is kind of crashed. It doesn't show any events, so I had to switch to an alternative view. Let's take a look on the today. Just changing if I can change the time. Oh, the time zone is right for EU. All right. So we got some inflation expectations coming out tonight, EU time. The forecast is 6%. See if it gets much worse than that. With these things, it's always look at the forecast. If the real number or a big change on the forecast, then there's usually a chance for a bit of a panic shock there. PPI is also coming in. Don't think that will be such a market mover. The C production index month over month. Probably not going to change much. What do we have? Retail sales could definitely be a market mover if there's a big crash in those things. So that's tomorrow afternoon, just an hour before stock markets open. If it drops way below the forecast, then we could be in for a bit of a shake. And then one of the bigger ones is later that day on the Wednesday, the FOMC meeting and the Fed interest rate decision. You see they also marked red here in this calendar. And obviously the following press conference. And it's expected that the Fed keeps the interest rate flat. Really don't expect a change there, but it's always good to keep an eye open on those times. Housing permits, don't really see it. Jobless claims could be interesting, obviously. All in all, there are some items going on, but being December, I don't think there will be many market movers. The only thing I'm really watching this week, yeah, nothing really there. The only big thing for me to watch this week is the FOMC meeting and the Fed interest rate. So Wednesday, 8 o'clock in the evening, EU time, could be a bit of a decision point in the week. So let's take a look at some price action on the altcoins and just give you without Bitcoin and Ethereum, bit of a mixed feeling. Some alts are slightly up, some alts are slightly down. There's no really, Hex is all of a sudden popping up again. But there are more exception than rules. There's no insane winners and there's no really insane losers on the altcoin front. And if we look at the higher time frame analysis, we're still going sideways since 5 December pretty much. After that liquidation event there, that's with the nice wick. We did flip red on the CTO ribbon, but obviously that's quite delayed, and that's a reaction on this big dump. In the daily heartbeat, we're still pretty much in oversold, almost close to oversold territory, pretty stable sideways action there. Logarithmic curves. You see, we found support in that fair price band, the middle of the range. Still plenty of room to go up and down long term. Keep in mind, this is a weekly view, so that's a lot of time we're spending. We're definitely far from cycle peaks, and we're still very far from cycle bottoms. So nice bounce, exactly on that midline, same as we had in September. So no shocking things there. Nothing to report here. These are some other views and some fractals I've been playing around with lately. You might see them on the Twitter. It's just widely speculating on how things could go. I'm still eyeing the possibility to get a bounce back to the low 40K-ish, like 41, 42K-ish region. That would make quite a bit of sense on the higher time frames. Looking at some supporting fundamentals here, exchange reserves still dropping. The net flow had a bit of a spike during that wick down, obviously. Now pretty much stabilized. No peaks in inflow anymore. Nothing really crazy going on in the inflows and the outflows at the moment. Just that little spike there when the peak happened, and I think this shows a very clear picture. The net flow on derivatives exchanges had that peak, while the spot exchanges didn't peak at all. So it was very clear from these two graphs that the recent dump was completely fueled by the derivative exchanges, shakeout of the leverage positions. Just looking for another chart quickly. If I can find one that loads. So this is the aggregated open interest of Bitcoin futures from pretty much all the future exchanges. And if we look, open interest was really floating still high, even though over a 3-month period we had some peaks there in November, and it's gradually declined. And now we had like the big reset of the leverage exchanges recently on 4 December, 5 December, 3, 4 December. So this is a healthy move with much more realistic levels, but there's still some room to drop there. So I still think that there is a good chance that we get a bit of more downside move before probably end of December, maybe January, we get a bigger push back up. Because when you look at these levels, we're still like healthy levels to me is around the 10, 11 billion, maybe 15 billion, at least below 15 billion. That's what you see before we get a very big leg up. And we're currently still at 17, almost 18 billion open interest of the futures market. So it has cooled down quite a lot because we were at 28, almost 29 billion. So we did half of all the leverage positions have been closed. And you see that they're starting slowly to build up again. But there's still a bit of room to drop down on the open interest rate. Short term, few weeks maybe. And this is for me one of the clearest pictures you can get about analyzing the dump. Derivatives exchange reserve also low. Let's take a look at one of my other favorites. Miner position index still healthy and growing. So the miners are not dumping their coins. So obviously they are big players and they expect higher prices. Otherwise we would have seen a different more further dump down on that and with much more. See, the line is still pretty much flat, so there's no big drop in the miners. Ethereum staking keeps increasing. Ethereum reserve keeps decreasing. Number of token transfers was quite low in the dump. Another sign that the dump was not coming from spot exchanges, but really from leverage exchanges. Hash ribbon broke all-time highs again. So we had the whole China miner exodus, where we dropped quite a bit, but hash rate did recover very nicely. So the security of the network is still very high, very strong. Other waves also look good. If it loads, you see that the people that have been selling, the coins that have been selling are in the 3 to 6 month regions. So the short-term holders have been selling a bit. That you see by the spike of the coins moving, and all the long-term holders are still hodling mainly. So not really like a spike that we've seen in the orange to yellows that we've seen before, or even the green ones. That's an realized cap. The holder wave itself shows the same picture. Miner balance. Oh, all of a sudden they moved that chart to a higher level of subscription. Fill ratio, definitely not overbought, but also not oversold yet either. Also, something that keeps me from dismissing the low 40 levels. As ribbon we already saw. This is the open interest in a different graph. This wouldn't load earlier, that's why I took the other one. Open interest is increasing. Leverage positions are back open again, but really don't. I can't go any higher than this. So don't think it's. There is still space for a bit more drop on that. These charts we had. So quickly looking at the more recent short-term price action. We had a nice in the 1 hour, some on that last wick. The CME gap fill was also the target of a nice harmonic. There is a 4-hour harmonic that is in the low, say about 42K. It would be a very nice level for this harmonic to play out. If it comes that much down. On the 8-hour, we see that 55K is a possible rejection point based on harmonics. But at the moment, there's nothing really close to take into consideration there. Quickly look at the TD sequential multi-time frame. So the low time frames, like 1 to 8 hour, are still in a bit of the downtrend, but pretty much floating in the middle because of the sideways action. 12-hour time frame is halfway a wave up. Daily is also just floating around the low numbers, so no really big changes there. The weekly is something though that to keep in mind. We're on 5, 6, 7. Let's just count the weeks to go. 5, 6, 7, 8, 9. So on a weekly bottom, and the TD sequential would bring us to mid-January. Keep in mind, you have to close lower than the previous, the 4 candles back, 1, 2, 3, 4. So we could float, we could go up until 57K even without breaking that cycle. So it doesn't mean that we're really going down, but it is a sign that we might float a bit sideways yet. Getting an 8, 9, just like we did here. Pretty much we had a dump, a few weeks of sideways action floating up and down in a pretty broad range before taking the leg up. So personally, I don't see all-time highs until maybe end of December if we're really lucky, but probably going to be January before we get in those regions again. Another sign for more sideways action that we had. Looking at my favorite laser show, you see perfect rejection on that scan line. On the daily chart, it was made on the daily chart candle close, so that was including this wick. We're floating around this long-term zone that comes back all the way from February this year. And there's a lot of work to be done. There's a very heavy zone of resistances between 55K and all-time highs, obviously, that needs to be broken. But all in all, it does not look bad. You know, we bounced perfectly from this zone with a very strong rejection of lower prices. We are now battling for the 50K level a bit. We had a CME gap fill. This is where CME closed before the weekend, and this week down exactly touched the the CME level, like within a few minutes, and it barged back up. So there was definitely quite a bit of buying pressure there from those CME bastards that keep doing this. So the gap has closed, and we're pretty much fighting for that, for this zone around 50K. We did break it in the weekend a bit, but weekend pumps I really don't like, so I'm happy we didn't barge through too high. This is still the support zone I'm looking for on higher time frames, on daily time frames. It makes even more sense that we get a bit of a second bottom. My bet is 43K if I would have to mention something as a potential bounce zone. But at the moment, sideways action could take a few days before we got there, if we get there. So not really much to predict at the moment. Most signs show a bit of sideways action with possibility of another low, second higher low, probably on the low 40 region, 42, 43K, around this support box. And I think December will be a bit quiet on Bitcoin front, but that would allow, that would give some some space for a nice run in the altcoins, because if Bitcoin goes sideways, often the alts come out to play. High time frame, I just have to disable the C meter. Ethereum looking quite strong. Bitcoin did outperform it a bit, but that's not really a huge surprise there, because Ethereum has outperformed Bitcoin quite a bit before that. US dollar still being crazily printed up. We see we hitting the top of the resistance zone again. So interesting to see what will happen over the course of the week. I really don't want to see it making higher highs, but luckily we having, like, how many days rejection did we have already on the last 10 days? Open days, obviously work days. So pretty much the last 2 weeks, we have been rejected at the same level. And we all know the longer it takes for breaking a level and failing, the bigger the chance is for a nice drop down. So US dollar still looking weak, even though it's managing to float in this resistance zone, but 10 days of rejection in a row increases the chance of a drop, and that is good for us Bitcoiners. Stock markets being printed to the moon still, so nothing really floating. The third time it's hitting the SP 500. 1, 2, 3, the fourth time it's hitting it. That wouldn't surprise me if this breaks up this week. We go to new all-time highs. What does it rise? Gold is also in waiting mode. Bitcoin is still very nicely in this two potential patterns. Potential one is an ascending wedge that we don't really like to see, because that's pretty much a bearish pattern. Could also be an ascending triangle, what is a bullish pattern. So we just don't have enough touch point data to confirm it. We have touch point 1, 2, 3, 4. So we need another touch point at the top to show us which pattern is more likely. Will we shoot to 70K too soon? Then this ascending wedge will be confirmed and we might drop a long way back. But I think more likely is that this will form an ascending triangle over the weeks. And if you look from the start of the triangle to the potential end, it's about 60 bars, so 2 months. So the breakout point is usually around 80%, about 60 to 80% on these time scales. So also that is pointing towards end of January, the last half of January, for a breakout to the upside. We do have some RSI divergence that's in development, depending if we bounce up here or not. Hash ribbon still okay, volume is still declining. What supports the theory of being in a long-term accumulation range. Bitcoin dominance on the weekly chart, no change. We're still at that triple bottom scenario where if things don't change drastically, we might see a very big run up of Bitcoin outperforming the rest of the market when it goes on one of its crazy runs in the end of the year or beginning next year. Just measuring the bottoms here, 16 bars and 13 bars. Usually with this triple bottoms, a quadruple bottom is very rare. So I think dominance will either break out to the upside or the downside here. And my guess is if you want to prevent it, you have to stay below the space of the last two bottoms. 13 bars would bring us to February already, but also this chart points to end of January for major moves based on time. Volatility made it almost to the descending trend line. What's also a clear sign of accumulation ranges. We obviously did have a nice leg up, but no continuation just yet. So we might drop in volatility again for the holiday period in December. Long short positions on Bitfinex, no, pretty much flat line also. Market cap, you see, we have had some on that big wick down. On 4 December was the exact target of some high time frame daily harmonics. Two variances there. And also this is just begging for another higher low in this 1.9 trillion region, just like the high time frame price. So conclusion, we're in the zone, probably going to go sideways. Don't expect big changes until maybe last days of December, mid-January, end of January, before we continue back up higher, what is definitely the most likely. Be on guard for a drop back to the low 40s with a strong bounce. So definitely interesting to put some buy orders here in case we got another wick like that. I definitely will place some around that level. Probably just above the 42K. Put some buy orders in and see if they get limit filled. And hopefully this sideways period will bring a bit of moves in the altcoins, because recently we saw the very low caps being pretty much destroyed, and the mid caps are doing a bit better, holding on their ground a bit stronger. But we all know that the small cap coins can bounce up very violently with 20, 30, 40% gains in a day. So I wouldn't panic too much about that. So it's looking to be a boring December. There's no other message I can extract from the charts at the moment. The fun part is it's very nice price action for the P Sargent scalping bots. On the 1 minute chart, there's plenty of moves up and down to be taken without too many crazy moves. So we can just gain on that. Definitely a nice place to do some short time frame scalping. If you just draw the box here of the zone in where you can do some nice scalps. The triple BB strategy is very nice for that in this case. So if you just put it into thirds, I'll just jump briefly to that. So if you're in that 50, this is one zone where you would be wise to look for some shorts. It's too small. This is the zone where you could look for some longs. And in between, I wouldn't really pick a side. So nice action there. If you want some lower time frame scalping, but don't expect big moves, maybe a flash crash to low 40s. Well, that's it a bit. Boring days. So I hope you guys enjoy the upcoming holidays. And if anything new develops, we'll drop it in the channels. Thanks for being here, and see you on the next Zoom or in the channels.